And straight onto the top story tonight, gold imports have actually surged in August right ahead of the festive season. According to reports, a day ahead of the official release of the trade data, imports of the precious yellow metal have surged in August to $4.9 billion. And this is a massive 40% increase over the last year's $3.5 billion. This is also in part due to a rise of 12% in overseas spot prices in the year. Overall, demand in India is forecast to drop this year to anywhere between 650 and 750 tons, the lowest since 2020. The surge in gold imports has raised concerns over India's trade deficit, which is already feeling the heat due to rising oil prices. To discuss the prices of gold and its outlook in the festive season, we are now joined by Navneet Damani, Head of Commodities Research at Motilal Oswal Financial Services. Welcome to the show, Navneet, and great to have you with us.
Hello, Sakshi, and thank you for having me on the show.
Gold prices have seen a dip of about 10% from its peak. What is the current demand scenario? Are people going ahead and buying gold much higher than what was the scenario earlier in the first half of the calendar year?
Well, the people whom we connect to and the jewelers that we connect to and speak to have not indicated any such great rise in or demand per se. They are maintaining that the year has been sluggish until now, and probably Diwali could be one big season, or probably the Ganesh Chaturthi festival could be one season where they see some bit of demand rising up or some bit of pent-up demand rising, because all this while we've seen a consolidation in prices or a correction in prices. Yeah. And believe me, when there is a sharp correction in prices, people want lower prices and they do not wish to buy it. So if we see a reversal in prices, if gold heads towards 61,000 once again in the near future, you will see a rise in demand. But otherwise, prices are likely to consolidate. The demand is going to be lackluster.
Okay, so what is the demand outlook going to be for the entire festive season that follows? You said that it is going to start off from Ganesh Chaturthi, thereafter Dhanteras, Diwali, we have Navratri also in between. And all of these seasons are really used by all the people out there to buy extensive gold. There are auspicious days as well. So what is the demand outlook for the festive and then the wedding season also coming soon?
Well, the demand, World Gold Council suggests that the demand could be to the tune of 650 to 750 tons this year, which could be the lowest probably the last three and a half years that we've seen. Okay. And to top it up, we've had an extra month where not much of purchases for gold has happened. That's called the Adhik Maas festival. So I think the next 3 months is likely to see some pent-up demand. The first half of the year has not been great in terms of demand, but the next quarter or so is likely to be very, very strong per se in demands. There are two aspects to it. One, that the market has corrected by 10% as previously discussed, so people will likely get it at a cheaper price than what they could have got 6 months back. And now the prices are in a little consolidated mode, and people started to realize that the dollar USD INR per se has been sticky around 83 levels. Some kind of diversification could come from equity to other asset classes. That is why probably next 1-2 quarters looks little lucrative for gold prices.
So it looks lucrative, and the demand, the pent-up demand could actually pick up in the festive and the wedding season. Can that also lead to further increase in imports in the months to follow? We are already seeing a 40% surge in imports in the month of August. We just had about 1 or 2 festive, months, festive days. But, in the months to follow, there will be a number of more days. So do you think the imports will also surge accordingly?
Well, the 40% import is because of the lower base impact that we saw in the previous year. So I don't think we should read much into the 40% import number because of the base impact. This number is looking a little bloated. But the demand could be actual and real, and that is where I think a lot of traction would come in. And some premiums could be coming in for the domestic buyers.
What about the prices then, Navneet? You did say that, the prices have been consolidating recently, but with the increase in demand that you expect, will gold prices also surge higher? They've cooled off 10% already from the record levels. Is that going to encourage people to buy more gold in the upcoming festive and wedding season?
Well, Sakshi, we've seen about 30-35% rally in gold prices over the last probably 30 months. And I think most of the triggers which were tailwinds are now starting to become headwinds are facing gold headwards. We've seen Russia-Ukraine war is pretty much discounted, and until and unless we see a full-blown action once again, it's out of sight, out of mind, that is not going to impact the prices. Along with that, interest rate cycle has started to peak out, maybe another 25 basis point or 50 basis point hike in the near future, if at all. Otherwise, the cycle is likely to turn most likely as we approach 2024. Inflation has been cooling off. We were at around 9% inflation in the US, and currently we stand at less than 4%, which is also an indicator that inflationary measures have worked and are likely to cool off. Dollar index has been pretty consolidated. So all these factors, which were the drivers for gold prices, have started to now cool off, and I don't see a reason where prices could be headed significantly higher from here on. So if at all they run up, maybe 3 to 5% rally could come in over the next 6 months, 12 months. But most likely it could be a year where you could see sideways to negative returns for gold prices.
Okay, so if you could break this down a little further for all our viewers to really understand this in terms of the spot prices, the gold prices that they are currently, and how do you see the prices moving by Diwali and then by year end?
Well, as I mentioned, maybe 3-5% upside. So as we are at the current juncture, we are trading at 58,500 odd. Maybe in best case, we could go to 61,000 levels. But I will not be surprised if we head towards 57,500, 56,000, say probably by the end of the year or end of the financial year 2023-24.
All right. Well, many thanks, Navneet, for being with us on the show and sharing all these wonderful insights with all our viewers. Great to have you with us on Business Today.